How do non-qualified 529 withdrawals work? Have you ever wondered what happens if you take money out of a 529 plan for something other than education? Let's break down how non-qualified withdrawals work and what you need to know. A 529 plan is a special savings account designed to help families save for education costs. When you use the money for qualified expenses like tuition, fees, or books, the earnings grow without being taxed. However, if you withdraw funds for non-qualified expenses, the rules change. Non-qualified expenses are those not directly related to education. This could include costs like transportation, health insurance, or college application fees. When you take money out for these purposes, the earnings portion of your withdrawal will be taxed as income. Plus, there is an additional 10% federal penalty on that earnings portion. The good news is that your original contributions, or principal, are not taxed or penalized. This is because you already paid taxes on that money before putting it into the 529 plan. If you find yourself needing to make a non-qualified withdrawal, it's important to be aware of the potential tax implications. For example, if you withdraw $1,000 and $600 is earnings, you will pay taxes on that $600, plus the 10% penalty. This can significantly reduce the amount you actually receive. To avoid these penalties, keep track of your qualified education expenses carefully. Make sure to include tuition, fees, and other related costs if the student is enrolled at least half-time. Also, subtract any tax-free educational assistance, like scholarships, from your total qualified expenses before making a withdrawal. Only withdraw amounts that match or are less than your net qualified expenses. This helps maintain the tax-free status of your withdrawal. If you have leftover funds in your 529 plan after education is complete, you have options. You can change the beneficiary to another eligible family member or leave the funds in the plan for future education needs. Non-qualified withdrawals should be a last resort due to the tax and penalty consequences. Understanding these rules is key for managing your education savings effectively. By planning ahead and keeping track of expenses, you can make the most of your 529 plan and avoid unnecessary costs.